Dan Loeb, David Tepper, Warren Buffett. These people have a few things in common. They're not just billionaires, that is something they have in common. They're actually very successful investors. That's how they kind of got to their billions of dollars of worth. And they're commonly referred to as super investors. Now guys, when they make moves in the market, when they buy or they sell stocks, it's worth paying attention to. It doesn't mean that you go and follow them and kind of mimic what they're doing, because you're always getting lagging data from last quarter. So things may have changed in this quarter already. Like, we won't know until next quarter when they release the filing. But it definitely does kind of tell you where these super investors believe the market's going and kind of where they see value out there, what kind of stocks they're looking at. And right now, it's super interesting because big tech companies in general are kind of where a lot of focus is. So anyways, let's not waste any time. Let's get into this. Let's talk about the 5 most popular stocks these super investors are buying. And kicking us off here with number 1 is Amazon, the massive e-commerce giant with AWS and, who knows, hundreds of other products that they have. And 15 super investors actually bought this stock last quarter, with some actually adding sizable chunks to their position. If we look at Amazon's performance during the last quarter, we can see they clearly bottomed during these months. So they likely got some solid cost bases in here. If they were buying like say the $80 range, they're up despite Amazon not being as strong as other stocks so far this year. And that's really interesting for us because if you kind of believe or follow these investors and kind of like their philosophy, and maybe you're also a bull on Amazon, clearly they see value around these prices, and as long as it stays under $100 per share, I think you're getting some pretty good value here with Amazon. Moving on, number 2 is Meta with 13 buys in the quarter. Now, I'm not exactly sure where they bought. Maybe it was closer to the lows, maybe a little higher, but say they got this under $100 per share, they're up close to 100% off of their lows. And me personally, I've been a Meta shareholder for quite a few years. I've made videos on the channel before around Meta, when it was called Facebook, of course. And I actually took the opportunity to buy a few more shares when it was in the $90 range. Of course, it's done incredibly well since then, and I kind of wish I bought more, but hindsight's 2020. I'm happy with that position. And I think the fundamentals are super strong with Meta, but the news cycle just got super pessimistic, super negative, and that's kind of where the opportunity was. And guys, speaking of news, did you know that we have a free weekly newsletter called The Compounder, where we summarize news on your favorite stocks every week, deliver that to your inbox, and it's absolutely free. It'll save you hours of time researching companies and figuring out what happened in the week. It'll keep you up to date, it'll keep you more informed with your investments, and you'll kind of become a better investor overall for free. So if you're interested, link description down below, thecompounder.co. Amazon and Meta are 2 of the companies that we do cover from the few selective stocks that we're covering right now. So sign up, comment, give us some feedback. We'd love to hear from you guys. So moving on, we have Microsoft here at number 3, who had 11 super investors pick up shares in the quarter. Microsoft dipped closer to the $200 per share range during the quarter and is up nicely since then. Of course, thanks to the ChatGPT, the Bing AI hype that's been around the stock. Now, this may be a temporary rally that Microsoft is seeing because of all the hype, and maybe some of these super investors actually reduced their positions this quarter. It'll be interesting to see. But regardless, this is one of those core companies that you can kind of set and forget for probably a very long time. They continue to execute, they continue to dominate the enterprise space. And while I'm personally not a buyer at these prices, it's definitely an incredibly well-run company. In at number 4 is Google. Now, technically Google I think should be number 1 here because it has 2 tickers, GOG and GOGL. And in total, if you add them up, they have 19 buys across both tickers. Once again, here you can spot the trend. Google hit its lows in Q4, it's up since then. But the difference is that similar to Amazon, they're still trading under $100 per share. So there isn't much missed opportunity here with this stock. If you didn't manage to pick up shares in Google late last quarter when it was down, it's still not that high off of its lows, and you're still probably getting some really good value if you believe the fundamentals of this company are going to remain strong over the next, say, 3 to 5 years. Now, there may be some more short-term weakness. I covered that in my recent Google video, and I'm personally waiting for lower prices. But if that doesn't happen, so be it. It is a great company, but I want to get it at a even cheaper price, because of the new risks that have come up recently. All right, so in at number 5 is the only non-big tech company here on this list. It's Disney, and Nelson Peltz is buying enough here that it made up 16% of his fund's portfolio, and it sits at the third largest position for the fund. During the quarter, Disney saw a ton of pressure all the way to nearly the beginning of January here, which is worse than other stocks in the market. And the company was going through a lot of fundamental changes as well. A lot of these other companies were just seeing overall market weakness and they dropped because of that. Disney actually had fundamental things changing with them. The CEO back then got booted. Bob Iger, who left before, came back. He's one of the people that investors believes can actually turn this company around. They're restructuring the company. They're planning to save billions of dollars over the next few years, and they're planning to bring back the dividend. So a lot's changing with Disney. Clearly, some super investors are super bullish on this company going forward, and it'll be interesting to see where this one goes over the next year or so. Now the question, of course, you got to ask yourself is, a lot of them managed to buy during the quarter that we pretty much had the lows here. And you got to ask yourself, did they have, information that we didn't have? And that's kind of how they got these cost basis in. Or were they just lucky with their purchases and they managed to buy the bottoms here? Who knows? I guess we'll never really know. But regardless, guys, there is opportunity out there. There's stocks like Amazon and Google that are still close to the points that they probably purchased at as well. So there's definitely some good money to be made if you believe these companies can recover over the next few years. And that covers the top 5, but keep in mind there are plenty of other stocks that these super investors were buying, like Salesforce, Apple, Taiwan Semiconductor, Visa, many more companies here. But these 5 that we covered were the top 5 most popular. So I'm interested, did you own any of these stocks? Are you planning to buy any of these stocks? Did you manage to catch the dip back in Q4 last year? Let me know in the comments down below, guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.